anyways, we're going to get this started. He's talking about, I didn't watch the whole video. I just watched a little bit, but he's always good for watching. And I thought we'd get his take on the economy and what he's encountering. He's doing a little bit of traveling, running around, and then I'll comment on my own thoughts on it. And he talks a little bit about wholesalers, and I want to talk about that too, because I can tell you the wholesaling is really like it's really the lowest form of money making in real estate, and it has become totally ineffective because it's only really good in a buyer's market. I should say in a seller's market. In a seller's market, wholesaling's hot. But in a buyer's market, not so much. They're just not that needed. And it's been a seller's market, and people, I've always say, if you can get in between what somebody has and what somebody wants, you make a lot of money. So let's watch a little bit of this. We'll just go to normal speed to begin with.
But they're not. The listing agents are telling me when we're writing offers as House Hack, because we are, when we're writing offers, they're like, oh my God, thank you for actually having cash in the bank and not being another BS, and they'll actually say it like they're pissed, another BS cash offer. Because what's happening is people are coming in, they're writing offers on fixer-uppers, and there's always...
Yeah, so a quick note on that, and he's totally right. People come to the table, say they're cash buyers, and listen, I tell everybody, always say you're a cash buyer. If indeed you... No audio on Kevin. Hey, oh great. Let's see if we can fix that.
Like we're not even like all in on trying yet, and it's going very well already.
Okay, Richard, you threw me for a loop there. Okay, I didn't think we had audio. Okay, good. Well, I guess we did. Hey, thanks. So we got audio now. That's good. So what he's talking about, I'm going to back up just a little bit here. He's talking about traveling around the country and encountering, it sounds like he's looking for properties to buy and that sort of thing. And, I tell people all the time, you don't have to travel around unless you're really trying to spend a lot of money. And that may be Kevin's situation right now because he's got investors. Excuse me. But you got people in California trying to buy property in Florida, or buying property in Florida, buying property in California. And listen, the deals are right here. I just bought one last week. I guess it's been 2.5 weeks. $225,000. It's worth about $425,000. I got to do about $40,000, $50,000 worth of work, but there's a good $100,000 there, maybe a little more. It's actually looking really good. But I like what he's talking about, and I want to get into this because this is really important. If you're a wholesaler, you really are dependent on a fiery market where you can just tie something up and everybody needs something and there's not much inventory, and then you can hit up guys that are potential buyers and then they'll buy from you. But I've had wholesalers hit me up in recent times, and I say, they just text me. I don't hit these guys up. They hit me up, but they'll throw me a text, and they don't even know who I am. They throw me a text, and I'll go, okay, and I'll say, what's the address? And then I look at the address, and I see it's listed, and I might call the agent, or I might call the owner, and they'll say, yeah, it's tied up. Somebody's buying it. It's supposed to close on the 20th. And then I just go, yeah, and I go, what do you want for your bottom dollar on it? And they tell me what their bottom dollar on it. So what's your absolute bottom dollar on it if this buyer doesn't close the deal? And then they'll tell me, and I'll go, okay. And then I just wait, and then what happens is they call me and they say, hey, it's back on the market. And the guy that hit me up to sell it to me, he did exactly what Kevin said. He said he's an all-cash buyer, but he's insincere. And by the way, if you're a seller and an agent, listen, there's easy ways to get around that. But let's listen to this a little bit, and then we'll get into it a little more.
Another BS cash offer. Because what's happening is people are coming in, they're writing offers on fixer-uppers. And there's always competition. I want to be very clear about that, okay? We've gotten, in like the 3 weeks we've been trying, we've gotten 3 smoking hot deals already, and we're like half trying, okay? Like we're not even like all in on trying yet, and it's going very well already. The 3 deals we've already got are probably each over $120,000 wedges, so they're going really good. The problem that we face, well, it's not really the problem housing faces, the problem the economy faces, is it seems like there are people who are going out of their way to do hard money financing. And they're saying they're cash offers, but they're still contingent upon a hard money finance deal. And these people are speculating. Now, fortunately, we're still getting deals because a lot of the agents are like, I don't trust this crap. But some of the deals that we've lost, we're losing to hard money deals, and we see them fall out again and they come back to us. For example, the last one we got, I held firm at my numbers. I'm like, watch guys, they'll end up coming back, that other deal's gonna fall through and they'll come to us. And that's exactly what they did. But there are many more that are closing to people who are purely flip speculating. And let me give you some of the terms. You ready for this? 3 points. So you spend $600,000 with renovations. At 3 points, you're paying almost $20,000 in loan fees just to get a hard money loan. And now you're paying 14% interest. That's what some of the terms are that I'm seeing. And now...
Okay, well, so it's interesting, the point that he's making. And look, here's the thing. And I want to talk about this. He said, we are buying. So he's buying with other people's money. So however he's buying, whether he's paying cash or not, he's paying cash, but there's an expectation of, let me put it this way. If you're not paying 14%, are you collecting 14%? When I buy a property, I generally pay cash because I mean, for houses I pay cash. For buildings, I always finance. Houses are just far too much trouble. It's just so much easier to pay cash. It just gets rid of everything. And then whether it's a fixer-upper or just something that just needs a little, makeup, I'll pay cash for it. And it's going to turn quickly. It should be financeable to the next person. But the point he's making about how expensive it is, 3 points, and if you're buying a property under market, I don't care if you pay 3 points and 14% interest. I mean, if you're buying it at my standard, you're buying it so far below market, like maybe half or 35% under market. It's a small thing to pay 14% and pay 3 points because you're going to sell it and you're going to make that margin, whatever that delta is, and it should be significant. It should be significant. But to consider this, wouldn't you rather pay 14 points and 3 points and 14% a year or annually than have a partner and pay 50% and have to give up half of it? So you got to think in terms of numbers. A lot of people don't do the math, but so I tell people if you got a hard money loan and you got something you're going to make $100,000 on, who cares if it costs you $3,000 to borrow $100,000 or $9,000 to borrow $300,000? So you just keep in mind the math. And anyway, it's interesting. I like what Kevin's saying. Let's keep listening.
And they'll finance everything for you, but at 14%, you're paying $84,000 a year. Interest only, just to hold that property. Works out to about $3,600 a month. Once you add in property taxes and insurance, you're probably about $4,500 a month. Add to that, renovations and all this stuff. You've got a big leak. And if you can't profitably sell that property, especially going into now the winter months, where I think prices will probably be slightly up to flat, and this is really the opportunity to buy, you're betting that the spring market will be hotter. Now, I don't care because...
Listen, the interest rates, I'm telling you, in my opinion, they're going to keep going up. And the values are not going to go up. They've already pretty much leveled off. I mean, there's pockets here and there, where the economy is especially good. But listen, things are flat. I've been doing this for 42 years, and I can tell you, I started in 10% interest rates when I was buying and selling properties and carrying notes at that amount too. And you can't escape it. Interest rates go up, property values go down, and they're already flat and going down. And you can just see that everywhere. And to think that there's going to be a big difference between winter and summer, it doesn't matter. It's just going to get worse as long as the interest rates go up, and they will continue to go up. They're not backing off. And those of you, I used to listen to so many young guys, and I'm not talking about Kevin in this case, but say, oh no, the interest rates can't go that much. The Fed will go, can't do it. And they don't understand, or they never have seen rates at 10, 15, 12, 16% back in the 80s when I started, just in 1981. That's when I started, and the rates were coming down from about 16% just before that. But people can buy. They just can't buy as much because the typical public isn't how much, it's how much a month. That's how they measure what they can buy. Not they just say, well, can I afford it? They don't think in terms of cash. They think in terms of what's the payment. So let's keep watching.
Because we're buying long-term buy and holds, but some of the people speculate.
See, I would disagree with that. The idea of buying and holding houses right now, I think is a total mistake. So, but Kevin's, that's his deal.
Right now, I'm like, this is crazy. I think some people out there are thinking it's going to be 2021 all over again when rates come down, and I don't think so. I think we're much more likely to be back to a 2012 or even a 2011. Where in 2011 we're
how about a 1979?
kind of like, okay, prices bottomed the year before in 2010, and now they're kind of up, now they're a little down. You're pretty volatile in 2011 as inventory was up, but more buyers were coming out, right? And that's something that could happen here, is you could see rates fall, which lead more buyers coming out, but also more inventory coming out. So you get almost this vacillation, this volatility. But it's not just that speculation that I see, which almost in some cases reeks of desperation. It's almost like some of these flippers are like, I made so much money in 2020, 2021, 2022. Now I just need to get any deal. Just give me any deal. And even if I make 20 grand, please, it'll let me survive a few months longer. That's what it feels like. So,
and I think he's right about that. Wholesalers are they're washed up. And now the new craze, the sub 2, is kind of a way, and really, look, this wholesaling stuff, it only works, like I say, in a hot market where it's a seller's market. But the way things are going, now there's this sub 2 where people think there's this big opportunity because the values are dropping, and you've got a low interest rate, and pretty soon the value of the house drops to what people owe on the property. And they think, oh, this is a fantastic opportunity. Somebody's upside down. There's no equity. Listen, no equity deal, run as fast as you can. No equity means there's no money there. And like Kevin was talking about, a vacancy factor or things that get in the way of, having to fix up a property, throw a few dollars at it. And even if you get a property that looks perfectly clean, listen, air conditioner goes out. Air conditioning is $8,000 to $12,000 right now on average. And so you imagine you taking a no equity deal that you get in for peanuts, great, and all of a sudden $12,000 air conditioning problem. And you got to take care of it, or you're going to lose your tenant. In fact, if you don't take care of it right away, you will lose your tenant. No heat, no cooling. They're gonna walk, or they're not going to pay you, and then your problems will compound from there. So, but let's keep listening.
Again, it's great for House Hack because we're only going to do deals where the numbers make sense. And then otherwise, I'm just not going to buy properties when they don't make sense. We buy within our wedge, and we have no problem getting deals. But this is an example of what I'm seeing in certain areas. And what's interesting is the speculators are not everywhere. For example, they are not in Oregon. In Oregon, I don't know what it is with that market. And if you look at the actual data, you'll see more price drops, weaker price growth, and more supply. Compare Oregon to San Diego, okay? That's where apparently all the speculators are. Or even like Fremont, California, which I don't really want to buy it there anyway. But the rents are just too low. But you have people who are even home buyers doing this kind of speculating on these hard money loans, and it's just insane. So I'm worried that this is a little bit of a sign that people are kind of on their last legs as competing buyers. That's an opportunity for people with capital to deploy, obviously.
Yeah, listen, it is no time. I'm not a speculator. Anyways, I make my money the day I buy a property. That's when I make my money. And I showed a deal earlier that I bought an overpass, right, where there's an overpass in California. I knew an overpass was coming. I bought the property where the overpass was going to be, but it was slated that they were going to have an overpass, and I was lucky enough to buy the property, but I knew what I was buying, and it was under market even when I paid it. I paid $64,000. This is like back in like 1985, and that's the kind of speculation I think that's worthwhile. Or if you know where the sewer's headed, sewer's a big amenity to builders and for building property out. You got to have a sewer, and hang in there, and I'll be right back. You want to learn how to make millions of dollars in real estate. I've made tens of millions over my lifetime, and I'm showing people how to do it. Get in my free webinar. I have it every Thursday, 7 p.m. Central. Go to the link below, FlipAnythingUSA.com/webinar. Sign up for it. You can talk to me face to face if you want. Don't waste any time. Hit that subscribe button, hit that like button. You don't want to miss my channel. I've been doing it for years. All right. So, hey, some of the people that have wrote in here, starting here. Hey, Liam, glad to see you in here, buddy. And by the way, if anybody wants to call in, we can have a conversation as well. Let me get that number up here. Where is that number? Yeah, I'll put it up there. We can talk about some of this stuff. Hey, Chris, that's good to see you in here. Richard Lloyd, good to see you. Rob Johnson, he said he's trying to use scare tactics. I don't know about that. Yeah, I mean, maybe in all honesty, if you're going to perceive any of the scare tactics, if you want to call them scare tactics that Kevin's putting out, and that's not unusual to do. I do it too, to be quite honest. If you're trying to make buyers beware, right? Buyers beware. And I'll even tell you guys right now, because believe me, or I should say sellers beware. I'm sorry, getting tired here. Sellers beware. And when he's talking about these guys say they have cash and they don't. Well, listen, I always say you test sincerity with the wallet, right? If somebody wants to buy your property, you get a deposit, but you also demonstrate sincerity with the wallet. When you're going to go buy a piece of property, if you're sincerely going to buy it, what I do, I say, here's $1,000 option, meaning they keep that money. That's theirs no matter what. And then on the deposit, maybe I'll put $10,000, $15,000 down deposit on, maybe it's even just a couple $100,000 home. Maybe that's proportionately, that might be a little bit high than what most people would normally do. So in other words, I let people know that I'm very serious about closing. So I'll put a $15,000 deposit, $1,000 option, meaning if I don't buy it, I lose it, and they can keep the money just for writing the contract with me. It's a way of demonstrating that you're sincere, and it makes everybody else pale in comparison. Even if they have an offer that's as good or even a little bit better than you, yours is so much more assured. The other thing, look, you got a phone here, you get in your bank, and you just screenshot your bank account. If you have cash, you stick it in the face of the agent and the seller, and you make sure that they know. And texting is a great way. You text them, that you got whatever, $500,000 or $1 million or whatever you have in the bank, to let them know that, no, I'm going to close this. In fact, I'm going to close it 2 weeks or earlier. And you're saying, you show them that you have the cash. You're making it very, very clear that you are the best choice. Okay. Now, if an agent, that's why they pre-qualify people and everything else. I mean, a good agent would pre-qualify a buyer anyways. But, anyways. So listen, I'm interested to hear from Russ. Actually, Russ, if you can call in, you should call in, because he was talking about Portland. He made some comments about Portland and there not being any speculators. And I was wondering what your thoughts are on that, actually. Or Liam, you can call in too if you like. That's the number up there, guys. But we'll play a little bit more here. And by the way, every Thursday, 7 p.m. Central, I have a webinar, free webinar. I show you how I made my first million in the 80s, and I've made tens of millions since, and I show you how I did it. I show you the assets that I own today, many of them, and I show you what I bought along the way to make that money. And it's a great, valuable lesson to a lot of people that are interested in beginning to make money. I actually just watched, and I'm going to do a video on it. I just watched a testimonial, and oh my God, it was so sad, just to see this guy knocking himself out for peanuts. Let's see. Let's get started here.
Like house hack, but it is a risk that I highly recommend people do not engage in. I highly recommend do not speculate with hard money loans to where you're overpaying for deals.
Yeah, listen, I don't know that speculating by throwing your money into a fund that's paying cash for properties is any less risky than borrowing money from somebody at 14%. But particularly if you're getting a deal, if you're buying something that is a deal, then what does it matter? I mean, let me put it this way. If I give you an example, like a Grant Cardone fund, Grant Cardone would take pretty much look like 40% of the take. So people put their money in, and he takes 40% of the profit. Well, if you bought it by yourself, you'd get 100% of the profit. Chris Crone has some of those deals out there too. He tries to get people to put equity out of their home. Pull the equity. Think about that. You pull $50,000 equity out of your home, and maybe you pay 5% interest or 7% interest now, and then you put it in a fund, or you buy it with Chris Crone in this case. Maybe it's just an independent LLC, and you buy up. You pay full retail for a property, and it goes up eventually. And maybe after 15 years, there's a little meat on the bone. But you've given up half the profit and you put up all the deposit, and maybe on average the thing only made about 8% a year, income return at best, and you're sitting there paying 5% on the down payment that you put in there. So you make almost a zip. So anyways, you always got to do the math. You got to do the math. So it's interesting to hear him talk about this. Again, if he's describing this, what he calls a wedge deal, and he says there's $120,000 room here, and that's why they want to pay cash for it. If somebody else is buying that and they're paying 14% interest with 3%, that's peanuts. That's nothing. If there's 120 grand there, just flip it, right? But if you're paying full price for it or speculating that it's going to go up, then whether you're paying cash for it or whether you're borrowing the money, it's still foolish. So let's keep watching. I got to actually let somebody in on here. Let's watch a little more here, and then I'll take a caller in then.
Trying to make 20K. That's stupid. You honestly should not be touching a deal unless you're making 100 grand per 500K invested. That's my POV. Whatever.
Okay, he's talking about. Wait a minute. You know what? Let's listen to that again. What he just said.
Buyers. That's an opportunity for people with capital to deploy, obviously, like house hack, but it is a risk that I highly recommend people do not engage in. I highly recommend do not speculate with hard money loans to where you're overpaying for deals trying to make 20K. That's stupid. You honestly should not be touching a deal unless you're making 100 grand per 500K.
Yeah, I would agree. Yeah, I mean, I agree. If I'm going to put out 500K, I'm going to make more than 100 grand. But again, I wouldn't touch a deal that, for $20,000. That's kind of a joke.
Invested. That's my POV. Whatever. So anyway, and that's how, obviously I hope to IPO house hack at some point in the future is by taking properties people can't live in and turn those into functional, on the market, supplied properties. But anyway, that's something I'm noticing throughout the country is this speculation has sort of ramped up. But the speculation is only in the roughly certainly under the $1.2 million mark. But
yeah. Anyways, hey, who do we have on the phone?
Hey, Tom, it's Russ.
Oh, hey, Russ. Good.
I heard him mention Oregon, so I'm like, I'm calling in. I got a couple of minutes here. I'm waiting for my foot doctor's appointment. I'm here at the parking lot. But what I can say is, we got a lot of speculators here. So, deals are kind of hard to find. But, if they want to pump money from California to Oregon, we're welcome. I certainly have stuff I can sell them,
Yeah, tell me, what would be the motivation? Listen, it's beautiful. Oregon's beautiful. You don't see much sunshine there, but it's a beautiful place. And there's probably, if you go to Oregon or Washington in the summer, you'll fall in love with the place. But it's the other 9 months that it can be kind of dreary. Am I right?
We get like a certain amount of rain.
Yeah.
Especially in the winter.
Yeah, but what would be the motivation?
The winters are really soft.
Yeah. What's the economic?
Yeah, the winters are soft. Doesn't freeze.
I got you. So they're mild winter. Sorry, don't mean to. I used to live in Washington, and I remember walking through the slush as a kid. But that's okay. What I wanted to ask you is, you guys have state tax there, right? Oregon gets a pretty bad rap for not being, defunding the cops and everything else. It hasn't been particularly popular, but I know it's beautiful, and I know you've made some really good deals there.
I guess outside of the city, outside of Portland, you still find, good pockets, where, you can raise a family.
What's the industry?
The police are still funded.
What's the main industry?
So we have a lot of high tech. We have a lot of high tech industry in the nicer areas like Intel, chip manufacturing. The chip stacks are bringing us billions of dollars, expanding from Taiwan. They're hauling it over to Oregon, so that's bringing a lot of high-end jobs, cleaning jobs, not like metal mills, spewing a lot of, stuff into the air.
What about like Weyerhaeuser used to be real big, and in Washington there was a lot of aircraft too, but
yeah, so we got that outside the city. I guess the nice part is it's like an hour from California. You hop on the plane, and within like an hour you're in San Francisco, or an hour and a half.
Yeah, hunting and fishing too.
But a lot of our, yeah, all of that, and clean air. Ocean's not far away. We got the mountains with the snow. We have deserts too, so we kind of have pretty much everything, out here. And like I said, California is not too far away, but a lot of the California money pops up our market. That's what I noticed, especially, when selling. A lot of our, local buyers are like, hey, that's way too expensive. And then you get folks coming out of California, and then they just pay all cash, sometimes above, asking, sometimes like $150,000. I had that where they paid $150,000 over, asking price.
Right. Well, so I thought he said there wasn't much speculation going on there, is what he was saying. Is that what he said? I believe that's
so. If the deal is really good, it's hard to find it on the market. As far as speculation, I mean, I'm seeing homes, that people bought and they can't sell them now because the market, they paid too much for them. So there is some speculation, but I guess when you compare it to Los Angeles, I mean, it might be,
Well, I'll tell you what I've seen. You're seeing it in Florida. You're seeing it in Texas. In any state that there is no state tax. There's a lot of California flight. California is not a well-run state. It's terribly run state. That's why I left there 30 years ago. But people are coming to other states. Like, in other words, I was talking to a guy over at McAllister, I don't know, one of the other big outfits for commercial industrial properties. And he told me that a typical thing, he's got a lot of people that will buy at a 5 and 6 cap, which is terribly low, which is, for me, I wouldn't touch. But I said, well, what's the motivation? He goes, look, I got a family right now. And he goes, this happens to me pretty regularly. He goes, father dies, there's maybe $10 million, and 2 of the 3 kids, they say we want to sell, so they have to sell, and 1 or 2 of them will want to take that money and they want to put it into a property in Texas, and they want to buy like a AAA type property, or a business like Kentucky Fried Chicken. They want to buy the real estate where they have a triple net lease, and so they want a AAA tenant. They might buy a Walgreens or something else. Well, they don't know anything about real estate. They don't have a high standard for making money. They just want to take that money that they inherited and put it in something. They don't want to put it in stock. So they'll put it in a piece of real estate and be happy with 5%. But the problem is they come into areas like where you're at, or well, maybe not where you're at, but it happens. You're obviously getting some of it. But where I'm at, they're paying too much. And it really sucks in Texas because the tax rate is quite high on real estate here. And when you have somebody in here that's willing to, take a 5 cap on a piece of property or a 6 cap, and right now money, costs you 7.5, or I haven't even had to borrow any money lately because I haven't bought anything recently. But other than houses, and I pay cash for those. But the last line of credit I got was 7.5, and the one before that I got was 4.5. That's how badly things have changed in the last year. And I make money on borrowed money, and that is difficult to do when people are coming in and paying more than property's worth, in my opinion. But you're getting some of that frustration too, right? Oh, looks like we lost Russ. Sorry about that. Hey, if anybody else wants to call in, please call in. I appreciate you, Russ. Sorry we lost your call. And anyways, so let's listen to Kevin talk a little bit more.
But only 1.2 million once you start getting into NorCal. Most markets, that speculation stops at about $800K. And there's plenty of speculation in the $400,000 to $600,000 range because the monthly payments just aren't that bad. even with a hard money loan in those price ranges.
Yeah. So to that point, what I want to say is, I think there's the most speculation there is on anything under 400,000. That's like, because that's, I mean, listen, most of the public can't afford over 400,000. I mean, that's just how it is. So those people that could afford a $600,000 home, now 400 is the new 600, because it'll cost you as much to buy a $400,000 home today as it would have cost you to buy a $600,000 home last year. In fact, it's probably a little worse. But people that are operating, comfortably within the amount of money that they make, where they might have bought something for $600,000 this year had the rates stayed low, they got, they have to buy something for 400 because they've been priced out of it. And the stuff that was, say, 600 grand is probably down to 500. Stuff that was 500 is down to 400. I can tell you there's a 15 to 20% drop in all the homes that I bought and flipped last year. And I probably did $3 million worth of houses, something like that, in the last 2 or 3 years. And those houses have definitely dropped 15, 20%. And like I said, the people that bought those, most of the people that bought the homes that I sold, those are their homes. None of them were speculators. Those are their homes. And so they're sitting comfortably with a low interest rate. They made a good move. They got in at the right time for buying a home. And this is what's killing people across the country right now. And even it's going to haunt me at some point, because I believe the interest rates will be as high as they are today in 3 years. They'll be that high, maybe higher, but they'll certainly be about the same in 3 years. So that's why I don't think it's smart to speculate on buying a home at all. I mean, I don't like speculating in general, but things ain't going up anytime soon. Anyways, anybody got anything to say about that? Any strong thoughts? Liam, Chris, anybody? Richard, how about you, Richard Lloyd? You still there? Anybody? Here's the number on the screen. Call it and share with us. It's everybody learns, Yeah, you can travel around the country sitting right here talking to people all over the country. So, but I do envy. I'm starting to take a shine to the Tesla just when I see Kevin, the thing driving around, and he can talk hands free and operate the camera. Anyways, so let's listen to a little more.
So, for example, I just went through a multifamily building that was actually 4 single families, and it's $2.8 million, and it's just sitting. And I'm like, well, it's kind of no surprise it's just sitting, because the type of buyer who would buy this isn't here. So that makes me certainly, like, I'm like, well, it's not going to work for me either. I'm not going to overpay for this. But I find it very interesting, because even though we're getting plenty of deals, there is this weird stretch going on. And to some extent, you see that happen in every market. Certainly in 2021, people were doing this as well, where they're speculating, prices are going to skyrocket, and that worked out well. But if you combine that with the speculation you've seen in Airbnb, I think some real estate investors are probably going to be hit in the face with reality over the next year. And I don't think that's because prices are going to plummet. There are plenty of home buyers who are going to absorb this remodeled supply, but a remodeled supply that has to sell. You want to know a market where that's exactly happening, in my opinion? Look at Palm Desert. It's a super high Airbnb market. You got to be really careful about these markets. This is all the kind. Look, in like 10 minutes here, I'm trying to give you a synthesis of what I'm seeing on the ground and with the data, with real experience as an actual investor, not as a chartist who's only telling you, homeowner affordability is really bad. No duh. Have you looked at interest rates? No duh on homeowner affordability is really bad. Yes, rents have gone up, but not as much to make buying.
Yeah, listen, I know the Palm Desert some too. Listen, whenever you hear desert, think Florida swamps, because they're almost, I'll just tell you a scam that goes on. They'll have a seminar, say, in the Philippines. And Philippines is very difficult for the people that buy property that they stand on. It's very expensive. Also, Hawaii. People live in Hawaii. People, generations of Hawaiians, they can't afford to buy. They inherit, the family property just stays in the family. Well, they can't buy. So people go in to roll into, the Hawaii or into the Philippines, and they start talking about property. There's this great opportunity. You can buy out in the Palm Desert or the Antelope Valley, or you can buy out, we got this Florida, and then they talk about the improvements that are coming and why it's going to be so great. And then they convince a handful of people in these areas that it's the best thing on earth to buy, and that it's going to go up like crazy. And by the way, we pay a 20% commission if you bring in someone here to buy it. So they convince these people that it's the best thing in the world. Then they go back, tell their friends and family how great it is. Then their friends and family throw money at it. They make 20%, and then these people get burned. But I would disagree that the Palm Desert is an up-and-coming great area. This Airbnb stuff, if you notice, it's getting shut down in a lot of places. There was homes that went up from, say $2 or $3 million, went up to like $5 million, and then they outlawed the Airbnb locally, and then everybody's trying to Airbnb under the table, and then their values went down. It gets tough. But let's keep listening to Kevin.
Makes sense at these rates. But people are speculating rates are going to come down. So if they do, they'll be right, and those charts won't matter. But what is a real problem is the potential Airbnb bust. You look at Palm Desert, remodeled home after remodeled home on the market. In fact, there is one home on the market for every about 150 people who live in the Palm Desert. Compare that to San Diego or like Chula Vista, where there is one home on the market for every 3,000 people. That means you have roughly 30 times as many homes per capita in Palm Desert on the market as you do in Chula Vista. Gee, why is that? Well, Palm Desert is a vacation destination for Indian Wells, the tennis competition, Coachella. It's an Airbnb market. That shit's danger. Stay away, okay? Like, I would not touch that with a 10-foot pole right now. And that's why they say all real estate is local. You can't just draw like, take a big fat paintbrush and go, everything sucks or everything's great. You have to be really careful. Then you look at like in Oregon, where it's just like, okay, well, why is that so weak? It's not an Airbnb market. It's like people aren't speculating there, or people aren't even wanting to invest there because maybe the long-term rentals and vacancy rates are worse. That's another thing you have to consider. When you buy real estate, would you rather buy real estate in an area where the vacancy rate is 2% or where the vacancy rate is 10%? Colorado has a vastly different vacancy rate than South Florida, okay, or San Diego, for example. You look at a mid-market, you've got somewhere around 500 to 1,000 homes on the market. That's like your Utahs, other parts of Cali.
Yeah, so this is all kind of speculation what he's talking about, because he's trying to find pockets of hot markets. I can tell you, listen, I've made money in everywhere I've ever been. I bought property in Idaho, California, Texas, and I've started in terrible times, high interest rates. I've seen terrible downturns, and I've bought property every year, no matter what the economy was. And that's why the way I buy, everything is, I buy based whatever I can sell it for. Okay, that's where we start. Whatever I can sell it for, I'm going to buy 35% under market. As long as you maintain that, you will be successful, because you can't get hurt. But now you can hold on to it long enough for it to turn on you and bite you. And by the way, you guys, I should be plugging my book, Wake Up and Smell the Real Estate. If you don't have my book, get my book. Also, you can get into my webinar on Thursday night, 7 p.m. Central, talking just like we are in a Zoom. I've got students. In fact, let me just take a break from this and just show you something here. I got the best students. It's fantastic. If you haven't been in here, check it out. I have new millionaire students. Rich here, he's made over $1.3 million. Made $800,000 on one deal and about $350,000 between two others. And I'm talking about cash. He rolled that into buildings. He now has $150,000 a year income coming in from the buildings. He owns about $3.3 million in real estate with about $1.3 million debt, something like that. That's in 18 months. Mike here, he bought 3 houses within just a couple months of being in the course. Ken here, if you get a chance, take a look at the videos I've done with Ken. I would just visit him out near Napa, California. Ken made $600,000 on his first property, or I should say, and then he got another one for he made about 1.2 million on his first 2 deals, and another 200,000 on the third. Really, really great guy. Tina here, same thing. She flipped a few lots, made about 70 grand. Ron here, when I had interviewed him here, Ron had made 200,000. He's made over $3 million now. He's got like 40 rentals, and he's put cash in his pocket. He doesn't have anything out on him. That they're all his. I mean, he has some debt. I think he said, what did he say? He's got about $1 million debt on $4 million worth of real estate. That's what can happen. Garrett here made a couple $100,000. Chris here, he's probably made about $600,000-700,000 now. I just talked to him earlier. Liam here, he's in here right now. He's made over $550,000. Steve's made over $1 million. And this didn't take years. We're talking about 1 or 2 years at the most. So if you are really interested in real estate, you can make a lot of money, but you need a good mentor. Just like if you've ever had software and you're working on something and you're having a hard time and you can't get through it, and then you finally break down and you call customer service, and the nerd that helps you on the phone says, I just do this, and boom, 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 you're done. You're up and running. You could have saved an hour if you'd called them an hour earlier. Well, that's what I am. I'm your real estate nerd, the guy that's been investing for 42 years, that's got your back when you need me. You can call me. You can talk to me. I'll tell you what to worry about, what not to worry about. I got a fantastic course, and I got more students, more millionaires than anybody out there. In fact, I figured I've gotten well over $10 million in profit that my students have made. And really, that's really what you want. If you're going to judge a good school, you judge it by the students, okay, not a charismatic teacher. And that makes a world of difference, and you can see the results here. I urge you to, if you look at Pace Morby, if you look at Chris Crone, Grant Cardone, or anybody that you think is a good mentor or that claims to be, take a look at their students and look at the profits that that they have made, that the students have made. If it's peanuts, then that's what you're buying into, making peanuts. And nobody has a record like I have. And I've only been doing this 2.5 years. I've been making money my whole life in real estate. That's the difference. So anyways, let's get back to Kevin. And let's see some of the comments that came in here. Barry wrote, it's sad how easy it seems to be to get rich by scamming. It's the truth. Oh, my God, Barry. Let me just tell you. This is one of the things why listen, I'll tell you, it's easy. I'm a rich guy. I can take the high road. I don't have to squeeze and suck the life out of people that are desperate and hoping to make money. And that's what a lot of these guys do. They know the desperation. They sell them on the idea they can make money. They'll let a guy, put $5,000 to $8,000 on their credit card to get in some shit course, and then they just sit there and string them along, and then they say, oh, you know what? There's another hack we got over here. You can pay a little more for this. Try this. Just change gears. More money, more money. And when you see, just by the way, when you see YouTube backslappers, collaborators that sell courses, a wholesaling course or a sub-2 course or this and that, when they go on, people say, well, why would they promote each? Well, because they split the money. They split the money. That's why. You are the bait. The people don't realize, when you don't know who the sucker in the room is, you are the sucker. So, but you're right, Barry. It's really, believe me, the people that I talk to, I see people that have been just pretty much robbed, or they feel robbed, and that ain't going to be my legacy. I got a legacy of people bragging that they're glad they met me, and that they can't believe that they can see some light at the end of the tunnel for retirement and for putting their kids through college. And that's this legacy I want, and I plan. So let's read this. Jay says, any wholesalers on here with dead lists? I am known for bringing back things to life. Okay, Jay. That's Jay working the room here. The fines for texting and cold calling coming out this week. Oh, interesting. Yeah, you know what? I tell you, this is one of the reasons my number is out there a lot, is I don't answer my phone. I don't answer it. I have to, if I don't know who's calling, I don't pick it up. And, I have all my the mentees, my students, I have all their numbers in there. So if their number comes up, boom, it gets answered, or I accept the text and talk to them. But it's pretty terrible out there. So let's listen to Kevin a little bit more. And by the way, don't forget, please hit that subscribe button, hit that like button. If you like what you hear, please support the channel, and I would appreciate it. And let's
whatever. You got about one home on the market per 500 people. That's like more normal. Maybe one home per 1,000 people. More normal. Chula's one extreme, and then on the other extreme you got Palm Desert. So the point of this is to say, I don't think that we are set up for this broad-based, massive, disastrous crash in the real estate market. But I do think certain areas are going to have a lot harder of a recovery. And if you are investing, you want to make sure you're investing and getting good deals, not in markets that are tanking, right? Because then you're not really getting a good deal. So you want to be getting good deals in hot markets.
Yeah, no, listen, hot markets can turn down too. Listen, I like Kevin. I've been, when it comes to making money in real estate, really the best thing you can do is just you got to check somebody's record, bottom line. Let somebody show you that they've made, tens of millions, or even if they just done a house or two or 10 houses, let them show you that they've made money on houses, so that that they know what they're talking about. It's like I say, test sincerity with the wallet, and if you're going to hire a mentor, they should be able to prove it up. Anyways, Kevin, I would just say, he sounds like he's talking about speculating a little bit and buying in what he considers to be hot markets. I think that's a mistake, because things change, and the interest rates, like I say, you got to make your money the day you buy it. And to Kevin's credit, he said he's buying a couple of deals that are $120,000 under market. That makes sense, but it doesn't make sense to hold them. It makes sense to sell them. So anyways, as long as you listen, there is no bad real estate. There's just bad deals. Don't make a bad deal, and you'll be fine. And I guess I'm going to kill it here and say goodnight. If you guys like the show, if you like me starting at 4 o'clock or 5 o'clock or 6 o'clock, or let me know what you think, and we'll do more. And thanks for watching, and we'll catch you later. You want to learn how to make millions of dollars in real estate? I've made tens of millions over my lifetime, and I'm showing people how to do it. Get in my free webinar. I have it every Thursday, 7 p.m. Central. Go to the link below, FlipAnythingUSA.com/webinar. Sign up for it. You can talk to me face-to-face if you want. Don't waste any time. Hit that subscribe button. Hit that like button. You don't want to miss my channel. I've been doing it for years.